Associates with your weekend financial market wrap-up, and this is for Sunday before the markets open. It's late afternoon Sunday, but nowhere near the market opening, and this is October 4th, 2020. So let's just look at where we're at first on a monthly chart on the financial markets, and then we're going to go to all weekly charts. On the S&P, we've had a backing off from the 34.99 high close, and we're sitting here down about 130 points. All right, we're in a new month, as you now know, so we'll see what it wants to do. We're starting off up about 15 points for the month. The market is still over the 18-month moving average, so the bias is up. We had a straight up rally. This is the first pause in it, and that's what it is. Why are we pausing? So much going on. We got the presidential election, and right now the polls have Mr. Biden leading. President Trump, as we all know, came down with COVID. There's many mixed stories. Some it's serious, some it's not so serious. Some say he's going to go home, back to the White House. I'll define that as home this week. We don't know. The debate between Kamala Harris and Vice President Pence, that will take place this week. And then we have the relief packages we have to consider. And according to Ms. Pelosi, they are still talking. I don't know how long those talks will go on. But obviously, if the president gets better, that's bullish. If the president gets worse, that's market negative. The corona relief bill, that's very important. If that gets passed, that's like take on risk in the marketplace. Of course, all that risk is right before the election. But let's be honest, okay? The markets looked at a Trump victory as favorable. If a Biden victory took place, how unfavorable would that be? And would it have the same lifespan that the break in the Trump victory had? You don't know. Nobody knows. So let's just look and see what we've got. As a market technician, we had a correction. It's the weekly chart. You were coming down, you had a bump, you came down, and now with a settlement over a previous high, did that correction end? That's the big question that you have. As for where the market's at on a closing basis, and this is all it is, this is a closing basis on a weekly thing, the market never did hit the 18-week average of closes. Now let's go to a regular bar chart that has the open, the high, the low closes for the week on the chart. As you can see, you've got a pattern of lower highs, lower lows. To negate the bear pattern, you have to get back over 34.2975. If it went straight up to that, it would negate the bear pattern, but would not start a bull pattern because you wouldn't have a pattern of higher lows, higher highs. So the market right now, in terms of the swing line only, is down. When you add moving averages to it, all the market did is fell back to what I call the line in the sand, the 18-week moving average of closes, MAC. This is the 100 MAC. This is the 200. The market corrected, went down, and that's what I call the line in the sand. I teach that in my charting course, and that's where markets often go after a big rally or a big decline, and the market will first go to that number and then figure out what to do next. This one spent 2 weeks fighting there, then it moved out to the upside. This one came down, only hit it one time, and has come back there. Wouldn't be surprised if it fell back to it. That's my point. But as a technician, throw off the name of the chart. The swing line is down, but the bias, as I define it, is up. Why? Bias is how I define bias, at least. If the market has got to close over the 18-week average, the bias is up. Under it, the bias is down. So when you get a downtrend on a swing line, you're looking for the bias to be down. You don't have that. The two fight each other. You have nothing but a correction. When I look at Bollinger Bands, you went up on the weekly chart to the Bollinger Band and you failed. Exactly what I teach in my charting course. When you get a rally like this that's not coming out of sideways action, generally, I can only use the word generally the first challenge of it results in the market stalling at that number and giving back something. Why? Because the Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. Therefore, I know it, algorithms know it, other sophisticated traders know about it. I'll define sophisticated, they know what a Bollinger Band is and the importance of it. That gets there, they look at that as a zone to take some money off the table. Coming back to the 18-week, okay, maybe that correction is over. I then look at weekly momentum. That momentum is pointing down. So I have momentum down, I have bias up, swing line down. In other words, I don't have anything. In the NASDAQ, it's the same pattern. You have the higher high, you went up to the upper Bollinger Band, you fell back right to that 18-day average of closes and got a bounce. Momentum down, no trend at all, and bias up. The Dow, the trend is down, the bias up, momentum down. Same thing, and do you disagree? You hit that upper Bollinger Band and you finally gave ground to it. You had hit it once before up here. Then you got up 3-4 weeks in a row, but you finally fell back to it, and that is often the case. In the Russell, it's similar. The market's got lower highs, lower lows. What the market did do, unlike the others, it set up a bearish signal for the week ending September 25th. During that, until the October 1st time frame, the market just played around and finished like this so far. We'll see what this market's capable of delivering right now. It has to get over 15, what is this number? 1573.70 in order to say, okay, the trend is no longer up, but any close back under that 18-day average is bearish. In fact, that's one of the things you have to look at. Any close in the Dow Industrials under the 18-day is bearish, under the NASDAQ, bearish, because that would give you lower highs, lower lows, and in the S&P. But those are on the weekly charts, and keep that in the back of your mind. When we come to the 30-year bonds, we have been falling. Now, we're in a sideways pattern that's almost a pipe, not quite one. It's very close. But the trend is down, which is surprising because that's saying that interest rates are actually climbing in this environment when we know the Fed is committed to keeping them low, maybe even lower, all the way into 2023. This is a pipe. This is exact sideways action. You see that? Not quite that in the 30-year. So pipes, I tell people not to trade. Dollar index, I'm looking for a failure on the rally at 94.80. Why? Because the first rally off of where a Bollinger Band ends and momentum turns up and you get a rally underneath that 18-week average, that's often the zone the market has trouble with. We'll see if I'm right or wrong if it culminates there. Eurocurrency, I don't know that this chart is right. I think they're missing some data here, so I'm not going to give you a big review on it. In the Canadian dollar, lower high, lower low. By the way, I wrote the vendor on that, so it's not like I'm just looking at it and I know it. Something wasn't right with that, and I told them that. They'll get it fixed in a matter of minutes, even on a Sunday. In looking at the market, momentum down. The trend is down, but the bias is up. I'm getting this in so many markets right now. Japanese yen. The yen is higher in early evening trade. I already looked at the FX markets, which are open before the futures, and it's getting a bid off of the fact that the president declared after the markets closed that he was going to Walter Reed Hospital on Friday. So now we can see the FX markets. Now, if the president gets really sick, you can imagine there's going to be a flight to safety. If the president doesn't get real sick, and if you get a COVID relief bill, do you really want to own the yen? This is what you're playing. But the chart action is bullish. That's the way I look at it. Yes, momentum's pointing down, but you have the swing line up and you have the bias up. I like when all three are together, not two of the three. Should you get a big rally, the resistances, the upper Bollinger Band again, should support kick in. Because the market finds positives this week, look forward at 94.09.5. In Bitcoin, the market has still got the swing line down, the bias is up because you're over that 18-week average, and momentum and pointing down. Fits into the pattern of so much of what we have. Then we get to the differential between WTI and Brent crude, and that number, well, it goes down to about the 175, 180 area, bouncing up 246. Is the 18-week average. That's the real fighting zone in the market. When you come to this chart, you can see that the Brent has been taking a beating, and that's because COVID cases around the world are picking up and picking up sharply. In the States, Brooklyn and the Queens are about to go into their next phase of lockdowns. They're closing the schools, they're closing restaurants, all meeting places. They are talking in America, the Regal cinemas, one of our major cinemas, Cineworld, which owns it, is talking of closing them down now, maybe until after the first of the year, all of them. The rationale, none of the big run movies are being let loose by the studios. Why stay open? You can't operate. I owned a movie theater. I know that business to a degree. You cannot operate at 25% capacity and make money. You're not going to make enough off the concessions to do it. Your costs are too high. They're probably going to close them down. That would not be a surprise to me at all. And that was a bad decision on my part to ever own one of those, and I did get out of it. Lower highs, lower lows, down to 39.37. In the WTI crude, we have lower highs, lower low, but sort of stalling right here. Again, sort of stuck in here. How much lower will you go depends on how bad COVID gets. If COVID gets worse, that really impacts oil demand. Should we get a break in a vaccine? Should we get treatment breaks that are really good? We will find out if that helps a little, but the vaccine's really the key for oil demand, in my opinion. In gasoline, the market had a big reversal down this week. You might be going back to the lower band, but you're really not trending. You got a higher high, lower low, just sort of hurt right here. No prices up there as you'd expect, and that is because we are sitting here now, as I said, well before the opening, but not at the point yet where I didn't want to put out these videos for you. You know, one of the things that I do is I'm up early, 4 in the morning, reading, writing, getting ready to put out my trade ideas for my subscribers. That's very different. You watching this on YouTube, you are not a subscriber to my research. You're a viewer of my free YouTubes. I cover for the subscribers 40 charts with very specific buy, sell, do this. Remember, by me getting up at 4, and sometimes I'm up at 2, just checking the markets, I'm looking to see what's going on in the world. So I'm filling you in at 5:40 in the morning, telling you what's going on in Asia, Europe, what should impact the markets, anything big there. Then I'm showing you what reports are coming out for the morning before they start getting released. Most reports in the U.S. start at about 6 a.m., with the vast majority about 9 p.m. Central Time. 7:30 to 9 is when those times, and that's a.m. Central Time, come out. I'll give you the estimates, what the report is, what the trade is looking for, and what the reaction in Europe has been to their report so far. Then we take it onto the charts for very specific trade ideas. The idea here is to be your mentor on these areas. Maybe you want to trade in the metals. What's Ira thinking of the chart? Why is he thinking that? I'm going to explain it all in detail every single morning. They change, as you can imagine. The price of it, slightly more or in line with a cup of Starbucks. The Starbucks you're through with in 15 minutes, maybe a half hour, right? You're getting 30 days of this, and then you decide, is this for you? You just let it run then. You can just click on our website. You can stop it at any time you want. I think you'll find it well worth the time and effort. All you need is one idea from me a month that maybe gives you that idea you wanted. Win, lose, or draw, I think you're going to learn. And that's the key to this. And I think you're going to get the knowledge for the morning starting out. I'm Ira. You have a good day. Thanks for watching.